Hi everybody, welcome to another episode on my channel. So today we'll be looking at Costco. This is a review I've wanted to do for a while. I'm very passionate about this company. I hold it in my portfolio and I've been getting a lot of messages telling me to do a review and a deep dive into this company, its financials, and why I'm very bullish on it. So let's look at the Costco. Costco is a wholesale corporation. It's a Washington corporation and it operates membership warehouses on the concept that offering members low prices on a limited selection of nationally branded and private label products in a wide range of merchandise categories will produce high sales volumes and rapid inventory turnover. So for the period ended May 8th, 2022, that was their most recent quarterly period. Costco operated 829 warehouses worldwide. 573 were in the United States. They were located in 46 states, Washington, D.C., and Puerto Rico, 105 in Canada, 40 in Mexico, 30 in Japan, 29 in the UK, 16 in Korea, 14 in Taiwan, 13 in Australia, 4 in Spain, 2 each in France and China, and 1 in Iceland. So this international expansion has just recently started for Costco. As you can see, the bulk of their business is conducted in North America. However, it is slowly expanding over the world. So that's Costco. Now, what are these brands? What do they sell? So we can go to their website. I'm sure everybody listening to this is very familiar with Costco. I'm not going to spend a lot of time telling you what they sell, but they basically sell everything, like they said. Very well recognized brands. They sell things across different merchandise categories. You have grocery in here, uh, business center, grocery, food, beverages, office supplies. They have a pharmacy, services. They have a tire shop, mechanical shop, photos, travel services. Literally anything you think about that you might want to buy, they most likely have a product category for that price. And like they said, they provide those sales services to their members. So you have to be a member in order to buy items, products, and services at Costco. So Costco prides itself on taking care of its members, and as a result, they have a very, very high retention rate. And we'll look at that later when we dive deep into their financials. So let's go and look at some of their financial metrics. I'm going to be looking at them in my portfolio. Here, as you can see, Costco, it's a lower position. It's about 5% of my portfolio. And like I said, I want to add more of Costco, and I will take advantage of opportunities as they present themselves. So I'm about 15% here. Let's go and click Costco. So here we can see ticker symbol is COST. It's down about 1.19% today, around $488 per share. Market cap of 218 billion. Price to earnings ratio, this is the price of the stock here, 488 divided by the earnings per share of the company. It's pretty high at 37, almost 38, and forward PE is about 34, almost 35. So it's a very expensive company, and I'll tell you why that is in a minute. Here we can see they have a free cash flow yield of 1.61. And look at their margins. Very small profit margin, like insanely small. 3% profit margin here. Operating margin is the same. But look at their earnings growth and their quarterly revenue. Growing at 15% year over year on their revenue side, and earnings are growing at 12% year over year. So it is growing very rapidly. Here we get a snippet of their cash balance. They have a lot of cash, they have some debt, but they are a net cash company. That's great to see for any investment that I hold. Dividends. They offer a dividend. It is 0.68%, so that is their dividend yield, and a healthy payout ratio of 25%, meaning that they have a lot of room to grow this dividend. Now let's look at their results graphically. So year to date, the company is down about 13%, not the company, the stock is down about 13% year to date. However, if we look at their revenue, they are just a monster, growing revenue at a very high rate of 8.64% per year over the past 10 years. This is awesome to see. As a result, I would expect their EBITDA to follow the same, even higher, at a growth rate of 10.23% per year over the past 10 years. So this is awesome to see as well. Net income, again, this is just great to see. 13.08% per year over the past 10 years. So high net income growth, high revenue growth, high EBITDA growth. Now let's look at their free cash flow growth. So the free cash flow growth, it is a little erratic here, but it's growing at 8.3% per year over the past 10 years, and their free cash flow per share. So this is why we invest in companies, to generate free cash flow per our equity investment or per our shares. Here we have it growing at 8.05% per year over the past 10 years. So very, very healthy to see there. Like we said, let's look at how they are a net cash company. Cash here is in the green, red here is the debt. So they have taken on more debt over the years, but their cash balance has also increased as a result. So I'm very happy with this. They're taking on more debt, but they're generating a lot of cash. And it seems like they're using that cash, investing in their company appropriately in order to generate these higher revenues and higher net income. This peach color here is capital leases. That's leases for their warehouses. They have to record them as debt. I don't consider them as debt. It's more of an accounting classification. So I would not really consider that debt. That is just rent for their warehouses. Now let's look at their dividend. I bought them as a dividend growth play, and they are growing their dividend immensely. I'm not sure why Qualtrim here is showing minus 19% per year over the past 10 years. That is not correct. It is growing huge. So this dividend is growing massively and at a very high rate. They also have a track record of paying out special dividends every couple of years. So these special dividends are massive, and you can bank on them to continue to grow their dividend over time, and you will be very well rewarded as a shareholder in terms of dividend growth. Shares outstanding. So prior to 1990 and right at 1993, 94, they had a huge share issuance, and they kind of built up their shares during that 2000 to 2005 period. Then they started decreasing their shares outstanding, and they've stayed relatively the same over the past 15 years. So they're not technically diluting you as a shareholder, which I like. They're not buying back a bunch of shares either. So they're technically not benefiting you in that sense, but they're not diluting you, which is great to see. Their share count has increased 0.23% per year over the past 10 years. Not very significant in my opinion, and nothing I would really be concerned about, as they have a lot of cash on hand, and it seems like they're growing using their existing cash flow and debt as opposed to issuing new shares and diluting shareholders. So that was their metrics in a graphical representation, very high level. Now let's go and look at their last quarter's results. So I've opened up their last quarter results on their website. I'm going to go to their financial statements. I love how simple this is. Multi-billion-dollar company, very easy to follow income statement. So let's go and take a look at it. So they're going to be releasing their results within the next couple of days on December 8th. So their last quarter that they're reporting here is May 8th, 2022. Here we can see their revenue is at about 51 million net sales compared to the prior year, which was 44 million. Membership fees, I want everybody to flag this and watch this. 984 million doesn't seem that significant compared to 51 billion there. But let's take a look at their total revenue. Total revenue 52 billion compared to 45 billion. And look at their operating expenses. They are huge operating expenses for these merchandise costs. Look at that compared to their net sales. There's not that big of a gap. But look at their operating income. Literally, the membership fees make up a huge portion of that operating income. $984 million is contributing to that $1.7 billion of net income. That is massive. So the majority of their operating income is coming from these membership fees. Now, you might not be familiar with Costco, so I'll elaborate. These membership fees are what they charge you to be able to shop at their warehouse stores. So in order to be able to shop at Costco, there are a couple tiers of membership. There's the basic membership, which is a lower fee. There's a business membership, which is a higher fee, and an executive membership, which is also a higher fee. So you need to be able to purchase these every year in order to be allowed to shop at Costco and take advantage of their great merchandise at lower prices. So their operating income generally is not very high on a percentage basis in terms of their net sales, but in terms of their membership fees, it is very, very good. So this membership fees revenue technically almost all flows down to the operating income line. And looking at their growth over the past year, we can see that they are growing for that same quarter over the past year, 1.79 billion, almost 1.8 billion compared to 1.6, 1.7. And for the 36 weeks ended for the same quarter, 5.3 billion compared to 4.4 billion. So there is growth there, as we can see and we saw previously on our charts. Here we have some taxes, and we look at their net income coming at $1.3 billion compared to the same quarter last year at $1.2 billion. And for the year to date, almost $4 billion compared to $3.3 billion. So very nice growth there. Here we can see their net income per share, the basic and diluted shares. Again, 3.05 compared to 2.75 of the previous year in the same quarter. And then year to date, 8.96 compared to 7.53. Very great to see. So let's scroll down here. All right, let's look at their balance sheet. So their balance sheet. Cash, they have a lot of cash on hand, 11 billion, some short-term investments, some receivables. Merchandise inventories, they are up year over year, but not too significantly. And their current assets, 33 billion. So very great to see here. They have some property and equipment. If we scroll down, let's look at their liabilities. They have some AP, accrued member rewards, some salaries. Very simple balance sheet. Current portion of long-term debt, not very large at all. And their other long-term debt, not very large at all. So if they wanted to, they could take their whole cash here and pay off all their debt, and they would have no problem doing so. Love to see that in the company. Very strong balance sheet. Awesome to see. Now let's scroll down and let's look at their equity. Have they issued any new shares? No, it doesn't look like it. Retained earnings. So again, very great company. Looking at their equity, they're not really diluting us as shareholders, which we saw. Scroll down and we can have a look at their cash flow. So a lot of people don't like looking at cash flows. They think looking at the balance sheet and the income statement is enough. But I like looking at cash flows just to provide a sense of how the company is using the cash that is provided to them, that operating cash, and how they are rewarding shareholders. So here, net income at the top, we can see that's coming in at about 4 billion. And then if we scroll down, we can see stock-based comp, 606 million. Not that great. But again, if we scroll down and we can see how much did they repay of debt? 800 million. So that's great to see. They had repurchases of common stock, so they are buying back shares of 254 million, and the dividend payments of 701 million. So great to see there. That is awesome. And their net cash and cash at the beginning of the year is there presented below. So awesome to see there. They did have to buy some inventory here, as we can see, higher inventory, 3.6 million. So that compared to the same quarter last year was not as much. And the cash dividend payments compared to the last year were also in the same quarter, not as much. So that is a little bit of a negative, but they are ramping up their inventories, and that presumably means that they're selling out of more of their inventories as the results have been getting fast. But also remember, these merchandise inventories are building up, and we'll look at that a little bit later. Now let's go and look at their memberships. This is one thing that I would love to see, and their discussion of their management. So here we can see their management is giving some other discussions for us as investors, kind of forward-looking statements, and to provide some context onto how Costco is performing. So they combined operating efficiencies achieved by volume purchasing, efficient distribution, and reduced handling of merchandise in no-frills self-service warehouse facilities. This we know, and these volumes and turnover enable them to operate profitably at a significantly lower gross margin than most retailers. They generally sell inventory before they're required to pay for it, even while taking advantage of early payment discounts. So it's great to hear. Here we see they believe that the most important driver of their profitability is increasing net sales, particularly comparable sales growth. Net sales includes our core merchandise categories: food, sundries, non-foods, fresh foods, warehouse ancillary, that's gasoline, pharmacy, optical, food court, hearing aid, tire installation, and other e-commerce businesses and travel. So this is awesome to see. and they understand that getting this comparable sales growth for the same stores is the key to increasing value for their shareholders and their company. If they can drive efficiencies at their current stores, then their profitability will rise over time. I want to go and see their highlights. So here we can see their highlights. Net sales increased 16%, driven by an increase in comparable sales of 15% and sales at 20 new warehouses opened up at the end of third quarter of 2021. That's great to see. Membership fee revenue increased 9%, driven by new customer signups, upgrades to their executive membership. Remember, that's the more expensive membership, and an increase in their renewal rate. That's awesome to see. People are actually trading up to the higher membership here, paying that extra, however much it is, $60 for the other membership for those benefits because of how great they view Costco's products. If we scroll down a little more, we can now get some background into their results of operations. So their net sales, they have them broken down here. Their changes in net sales by geographic location. So the United States 18%, Canada 16%, total company 16%, other international. So I encourage you to look at this. It's super great to see here. You can see how their net sales break up and where their actual sales came from. Now, this is what I wanted to see, their membership fees. So membership fees here are super integral, as we saw, in their net income and net profit, as they make up a large portion of that. So their membership fees, $984 million, as we saw, compared to $901 in the same quarter last year, and for year to date it is up as well. So they increased their membership fees, increased 9% compared to 11% in the same quarter last year, and their total paid members have increased to 64,000 here, and we're getting in millions, compared to 60 million in the same quarter last year. So they're increasing their total paid members. Again, the total cardholders here have also increased over the same quarter last year. So this is awesome to see. People are not only staying, but more people are coming and joining Costco as they see their services as a great value. They're gladly paying that membership fee of $50 or $100, $120 in order to gain access to their warehouses and buy those great products at a discount price. So I encourage you to look at these financial reports. As you can see, they are long, but they are very simple and very easy to read. It's great to see from a company that I invest in. Now let's go and look at Yahoo Finance. So I did see Yahoo Finance, and they actually picked Costco as Yahoo's Finance 2022 Company of the Year.
Costco has won the Yahoo Finance Company of the Year, coveted award that we give out each year to some best-in-class operators. And we chose Costco, among many reasons, is that your sales this year have been off the charts in a year of rampant inflation, eggs, butter, toothpaste, you name it. Why is that the case? Why have you won in this environment?
I think a couple of things. If you go back, first of all, over the last 2 or 3 years, while COVID is horrible and it's impacted all of us, from families, our people we work with, everything, supply chain, of course, in a perverse way, it's benefited Costco operationally. When it first happened, restaurants were closed. Who benefited? Supermarkets and Costco. During the summer, when people weren't traveling and people weren't going to concerts and ball games, what did? They bought stuff for the house, furniture, barbecue sets, electronics. So in many ways, we benefited. While certain departments were hurt in a small way, others were helped in a big way. If you think about it, Costco, on average, across everything from tires to mayonnaise to diamonds, we mark up our goods around 12 or 13%. Supermarkets are in the mid to high 20s. Home improvement centers are in the low to mid 30s. Apparel stores are 100 plus in terms of markup. So we are ultimately the extreme value proposition.
I was surprised to see the market reaction to your November sales. On the same store sales, a little slower month over month, but relatively speaking, almost a 6% comp in this environment is pretty good. Why do you think the market responded like that? You think that is them being concerned about a possible recession? I mean, do you see that in your business?
Look, over the last 6 or 8 months, as there's been inflation and concerns of a recession, Look, my answer is it rains on everyone. Maybe it drizzles on us, not hard rain. And so we've done a little better than our peers. This was a slight downtick in those numbers. And as one of the analysts said, in some ways we're priced to perfection. We sell at a very attractive multiple. We're doing well. You know, I've been to this rodeo many times over 38 years and 6 years as a public company. We are just going to keep working to drive sales and drive value, and nothing goes on a straight line. And we feel good about what we're doing, and we think we've gotten through the supply chain challenges as good, if not better, than anybody out there. And we're going to still drive sales. So does it overreact both ways, up and down? Sure.
Richard, it seems like there's a Costco on every block, in every state, every city, but that's not the case, right?
It's not the case, but there are quite a few. We have about 570 plus in the U.S., 843, I think. This is our 843rd one worldwide. And we're in 46 states in Puerto Rico and 12 other countries. And we open around 25 a year right now. And about 2/3 of those are still in the U.S. People are always asking, you know, isn't the U.S. saturated between us and our competitors? And we keep finding more market opportunities. And, you know, as our sales have grown, I think this location here, Lake Stevens, is a great example. We have several locations within 15 or so miles, and two or three locations. But they've gotten so crowded, thank goodness, and so busy that we can put another one in. We're not going to add a lot of new members, but they're closer and they're going to shop more frequently here. And so we think that there's still plenty of opportunities. When asked, how many locations are we going to have 10 years from now? You know,
that was my next question. Fire away.
Generally, the view is if we're open around 25 now, probably 25 to 30. And maybe if it's 2/3, 1/3 U.S. versus the rest of the world, maybe it's 50-50 or 60-40 the rest of the world 10 years from now. But we still think we have plenty of opportunities to grow in the U.S.
The Kirkland brand is a beast. I was walking around the store, a lot of focus on Kirkland, and rightfully so. How big is this brand each year, and how's it performing in this environment?
Sure, it's doing very well. If you think about it, I think for our fiscal year ended in August, we did a little over, I think, $223 billion in sales, and about a quarter of that was Kirkland Signature, so well over $50 billion in sales. And you know, we've not. By the way, not every Kirkland product that we've done and offered lived to tell the tale. You know, if an item is not performing, it goes away. But generally speaking, from the very beginning of time with Kirkland Signature, it had to be at least as good, if not better, than the leading national brand. We had to sell it ourselves at least a 20% lower price than we sold the leading national brand, than when we sold it for, not what it sells at retail. So a greater savings on a quality that's as good, if not better, than the leading national brand.
Something else that hasn't changed price-wise in a Costco store, besides the $1.50, the sacred hot dog soda combo, is the cost of membership. Is next year the year that you raise that membership price? You constantly get asked this about our earnings calls.
You know, if you look back, a time beginning in 1983, the basic membership was $25. We didn't have an executive membership, which is 2x. I mean, now it's 60 and 120. But that 25 was increased $5 7 times, I think. So from 25 to 60 today. On average, we've done it around every 5.5 years. So if you go back, the last time was June of 17. So starting in the spring of 22, we started getting asked the question. And needless to say, you'll know when we announce it and say things. What I've tried to say, and when we're constantly asked that question on earnings calls and directly, is that all the reasons why we would consider we could do it and it would work in terms of member loyalty, the value proposition that we constantly improve on and bring to our member, we feel certainly comfortable we could do it. It's a question of when, you know, when the headline is concerned about a recession and a concern about inflation, we don't need to do it immediately. Early on in 2022, I reminded people the last one was June of 17. The last 3 were 5.5 to 5 3/4 years. So they say, does that mean January of 23? I said, no. I said, it's a question of when, not if, but we'll let you know.
I was just walking around the store and I was reminded by how long people stay at Costco. There have been workers in here and people in here that have been here for 20, 30 years in some cases. Why is that the case? And do you think it's just surprising that you can go from a store manager in this environment to being in the C-suite?
You know, I think it's fine because that's what we've done from the beginning of time. The original concept in terms of take care of your employees was to certainly take care of them financially and with good health benefits. And I'm talking about 90% of our employees are of our 300 plus thousand employees are hourly, and nearly half of those are part-time. They all get health benefits and very good health benefits. So take care of your employees. Let them think of it as a career, not just a job passing through, and provide those growth opportunities. And now it helps that we're growing. If we weren't growing, that wouldn't be. But we're fortunate. We've never had to lay off people.
Last one, quickly, before I let you go. We talked to Craig Jelinek, CEO of Costco. He hinted there might be some succession planning in the works. What's next for you? I mean, where do you see yourself in 5 years?
4 or so years ago, friends and others would ask me, when are you going to retire? And I said 2 to 3 years. And that was 4 years ago. Today, when I'm asked, I say 2 years. I've been very lucky. I enjoy what I do. I get to work for a great company. But at some point, I will retire. I can see, I've always enjoyed, as part of my job, teaching a few classes. Not courses, but classes. I might do a little of that.
I know Wall Street is a big fan of yours, and I'll say this too. You're the only Costco CFO that I've known. I used to be an analyst that covered Costco, and it's always been a pleasure to follow your career, and you give great earnings calls. Richard Galante, Costco CFO, congrats on winning the Yahoo Finance Company of the Year.
Thank you.
Appreciate it.
It's
What a great interview. So there was a lot of points there, a lot of great things to hear about Costco. Their CFO commenting on some specific items. There are some things that I didn't touch on. Their Kirkland signature brand. They have their own house brand. They produce it. Like he said, they try to make it of a great quality. When consumers don't like whatever they've made, they pull it off the shelves right away. And they try to give consumers a value there with their Kirkland brand by making it cheaper than the comparable brand name product by about 20%. So that's an awesome thing to see about Costco. They manufacture that Kirkland signature brand and they stick by that brand. Another great thing that CFO said was, well, why have employees stayed here so long? Because they take care of their employees. That is such an important aspect of their culture, of their environment, of their financial results here. Like, if they keep taking care of their employees, they have therefore less turnover, less employee turnover, which means hiring less, keeping the same amount of people, keeping them happy, and therefore not spending as much to get new employees. They retain these employees, give them great health benefits, like he said. A lot of them are hourly workers. Usually when you have hourly workers, there's a lot of turnover, but not here because everybody is paid decently well. They are very happy with their job and Costco's environment and culture. Now, I do want to dive into one of the issues that was brought up in the beginning of the interview, and that was their stock sliding. So if we go and look here, Costco, if you look at my video on TikTok, you can see Costco did go down over the past 5 days about 8 or 9%. So this was one of the reasons why Costco shared their November sales results ahead of these next quarter Q1 earnings that are slated to happen in the next 3 days on December 8th. So Costco shares moved lower Thursday after they reported weaker than expected November sales over what could be a broader pullback in consumer spending. Costco said sales for the 4 weeks ended November 27th, which included Black Friday, rose 5.7% from last year. So that's a great increase from year over year for that same quarter. But it was slower than the October and September months, which were 7.7 and 10.1. So their growth in their net sales is slowing at a sharper rate than analysts thought. So that right there, that press release did panic some investors. As we can see here, their US comp sales were up 8.8%. So I think those are amazing numbers. I don't think those are, oh my God, the growth is slowing. We need to, discount the share price that much. I believe that those are still great sales numbers. The rate at which they're growing is definitely slowing, but we will be excited to see what happens in the next couple of days looking at their quarterly results. And here we can see the reason why the sales were slowing, or what Costco thinks will be the reason why they're slowing. It's the keywords you've been hearing all around: inflation, interest rates. People are working within their budget and shopping carefully, looking for value, and recognizing that they have to start with core consumer staples before they spend their dollars in discretionary categories. So as we saw, Costco does have, groceries here. So those are consumer staples, things we need to buy. We need to buy food, we need to buy household products. Those are what you call consumer staples or consumers essentials. These other products that they have here, these, TVs or these drones or these kids toys, all of these other things, those are things that we spend as consumers, are discretionary dollars. We don't need to buy those things in order to live. It would be nice to have a new toy for the kids or a drone or a nice TV, but we don't need to buy that right now if our budget is being squeezed. So Costco offers the groceries, but they do also have a huge focus on this consumer discretionary product side, which has impacted their sales as they noted. Scroll down, we can see that they believe, that gas prices have also affected their net sales. And this, in a nutshell, is effectively the only reason that I could see that the share price has declined over the past 5 days. So Costco shares were 6.4% lower. This was at the end of Thursday, and it went down to 504. As we just saw here on Qualtrum, they're trading at $488. So again, they're trading lower than they were before as a result of these November sales. So let's go and look at what we think the reasons are for buying Costco and why I'm very bullish on the company. So I've had Costco in my portfolio not for a long time. I actually bought it in my portfolio when Target released their results a couple of months ago, and their weak results caused Costco to drag down. Their stock price dragged down as a result in sympathy of Target's results. So I saw this as an opportunity to scoop up Costco shares. I got in Costco shares around $427 mark. You can see it on my channel. And I am very bullish on the company. I don't want to buy it at this valuation. I still think it's very expensive. But if it comes back down to that 450-ish mark, that 440-ish mark, 420, 430, I would be very happy buying this company over the long term. The revenue is growing at a very high rate, same as their EBITDA and net income. Free cash flow is growing very well. They're not diluting me as a shareholder, and they are a solid dividend paying and dividend growing stock and company. So I'm very bullish on Costco. I hope that this presentation provided an overview and encourages you to go see and learn more about Costco as a company and as an investment. I believe that's everything I have today for Costco. So I hope you enjoyed the video, and I hope you have a great day. Please remember, I am not a financial advisor by any means. My content is purely for your entertainment purposes only, and I am not responsible or liable for any investment losses you may occur. Please remember, investing is risky, so please do your due diligence on each investment. Again, thank you. I hope you enjoyed the content. I do everything in one live take with very minimal editing, and I hope you have a great day.